Welcome to the deep dive. Today, we're digging into a really fascinating question about Fiserv, ticker symbol FI.
Right.
Can this financial technology giant, always seen as this pillar of stability, actually transform itself, become a high-growth disruptor with this bold new digital asset strategy?
Or is it chasing a trend? Something that might, undermine the very stability it's known for.
Exactly. And by the end of this deep dive, you'll have the critical details to weigh that question for yourself. As always, our mission here is to take a whole stack of sources, articles, research our notes, and pull out the most important nuggets of knowledge, give you a shortcut to being well-informed. Today, it's Fiserv Inc. Our analysis is as of June 24th, 2025, with the share price from June 20th of $163.38.
Okay.
We'll break it down into two main parts. First up, the business, the management, the financials.
The fundamentals.
Right. Then we'll pivot to market sentiment, who owns the stock, the risks, and finally, our outlook. Sound good?
Let's do it.
Chapter 1, Business Analysis. Okay, so Fiserv. It's been this quiet, almost invisible engine behind global commerce, right? People call it a titan of financial plumbing.
That's a good description. Very apt.
But then, June 24th, 2025, this stunning announcement, a landmark partnership with Mastercard to launch its own stablecoin, FIUSD.
Big news.
Huge. So what does this actually mean for their core business?
Well, what's really fascinating is seeing how their basic model, which is, like that toll booth on a critical highway of commerce, is evolving.
Okay.
They provide essential tech, non-discretionary stuff to banks, credit unions, merchants. And that generates really predictable revenue, recurring fees, transaction-based high renewal rates.
It's a sticky business.
Very sticky. And it's split basically into two main segments. You've got financial solutions, that's the core banking for financial institutions, running their back office, essentially.
Right.
And then merchant solutions, payment acceptance, e-commerce, tools for merchants. Millions of them. Clover is the big name there, the flagship product.
And this new frontier you mentioned, FIUSD, tell us a bit more about the tech behind that.
Yeah, so the FIUSD stablecoin and the whole digital asset platform, it's built on Fiserv's newer Finxact core banking tech.
Ah, okay.
And they're leveraging the Solana blockchain, known for its speed. This is a major strategic push into digital finance. It signals a really significant shift.
Fiserv's a big player, right? S&P 500, Fortune 500. What does that sheer scale actually mean for you, the listener? How does it translate to market position, competitive strength?
Oh, the scale is immense. You're talking about serving roughly 10,000 financial institutions.
Right.
And get this, 6 million merchant locations worldwide. They process over 90 billion transactions a year.
90 billion.
Annually, yeah. So they are absolutely a dominant global leader. Their whole value prop is built on trust, reliability, deep integration. They're critical infrastructure.
So switching away is tough.
Exceptionally sticky, as the analysts say.
Uh-huh.
High costs, complexity, massive risk for clients if they try to rip Fiserv out.
Okay, connecting this to the bigger picture. What are the broader fintech trends Fiserv is tapping into here?
Well, the fintech market is just exploding. You've got embedded finance integrating financial services right into non-financial apps. That's projected to hit, $384.8 billion by 2029. And FIUSD is a direct play into that space. Then there's the rise of digital wallets, global payments, global reach, local tailoring.
Right.
And AI, artificial intelligence. It's everywhere now, especially for fraud detection, automation. The Fiserv is actively investing and integrating all of these.
But it's a crowded field, isn't it? Who are their main competitors biting at their heels?
Definitely crowded. You got direct rivals like Fidelity National Information Services, FIS, and Global Payments, GPN.
Okay.
Then the big payment networks, Visa, Mastercard, who they're also partnering with, interestingly.
Yeah.
And then the agile modern fintechs, think Block, formerly Square, and PayPal. They're all vying for pieces of this pie.
What about the rules, the regulatory environment, especially for something as new as stablecoins?
Yeah, that's crucial. Financial services are heavily regulated, obviously, and the landscape is shifting. Deregulation might be on the horizon in some areas, but the key thing for Fiserv right now is that the fog around digital assets, especially stablecoins, is starting to lift.
Okay, so more clarity.
Exactly. A clearer framework is emerging.
Yeah.
And that de-risks the FIUSD initiative, not just for Fiserv, but maybe more importantly, for their thousands of pretty conservative bank and merchant clients. That could really accelerate adoption.
So if you're a new player trying to break in, what are the barriers? What stops someone just setting up shop?
The moat as Buffett would say, protecting Fiserv is wide and deep. You've got huge regulatory hurdles, massive capital needed for infrastructure. Fiserv spent decades building theirs.
Right.
And then just building the trust, the security record, decades of it. It's extremely difficult for newcomers to challenge them at that scale.
Okay, this is where it gets really interesting for me. Competitive advantages. Beyond just being huge, what really makes Fiserv sticky? Hard to dislodge.
Well, brand strength is one. Fortune 500, world's most admired. They carried weight.
Sure.
Their scale gives them huge economies of scale, obviously. Lower cost per transaction. But probably the most powerful advantages are network effects and those switching costs we talked about.
Network effects, how so?
Well, their solutions are just so deeply integrated. For a bank, switching core systems, it's like performing open heart surgery, someone described it.
Ouch.
Yeah. And this new FIUSD initiative, that's a calculated move to build a new kind of powerful network effect, connecting their 10,000 institutions with their 6 million merchants on a new payment rail.
Any other unique capabilities that set them apart?
Absolutely. That integrated ecosystem serving both sides, institutions and merchants, that gives them unique data insights, cross-selling opportunities many competitors just can't match.
Right, they see the whole transaction flow.
Exactly. And they have this proprietary thing, the Enterprise Services Framework, ESF, which apparently simplifies complex integrations for clients, too.
That really lays out the business side well. Before we move to management, just a quick message about Stock Analytics AI.
Yep.
Please do like and subscribe to the Stock Analytics AI YouTube channel. For just €4.99 a month, members get priority deep dives on tickers. And listen, over the next few months, we are covering all of the S&P 500 stocks. Members get that exclusive priority access.
Wow, all 500.
All 500. And members can suggest stocks for future videos right in the comments. If you just want a one-off deep dive on a specific company, you can drop us a super thanks. Chapter 2, Management Evaluation. All right, let's zero in on the leadership. Specifically CEO Frank Bisignano. What's his track record look like, especially when things get tough?
Well, his background is pretty formidable. During the 2008 financial crisis, he was at JP Chase, managed the critical integrations of Bear Stearns and WAMU, high-pressure stuff.
Definitely nice.
He's also widely credited with turning around First Data, leading its big $2.6 billion IPO before engineering that massive merger with Fiserv.
The First Data deal was huge.
Transformative. And Fiserv itself is a strong business resiliency program, disaster recovery. They showed that during COVID.
Okay, but what about his management style? His reputation? We hear some conflicting things. How might that play out, especially with this new tech venture?
Yeah, this is an important question. Definitely raises some flags. On one hand, he's respected in philanthropy, and the company says they're improving shareholder communication.
Okay.
But on the other hand, there's this persistent reputation for a style described as dictatorial, maybe profit rather than people. It's been linked to high employee attrition, some public criticism.
And compensation.
His 2023 pay package was reported at $27.9 million. That's a 380-to-1 ratio compared to the median worker pay at Fiserv.
Wow.
And that kind of cultural friction, it isn't just an internal HR issue. It could be a real challenge, potentially hindering their ability to attract and keep the top-tier tech talent they absolutely need for this FIUSD digital asset venture to succeed. It's a tangible risk.
So how does that leadership approach translate into how they spend the company's money, capital allocation?
Management's approach here seems pretty disciplined, pretty consistent, actually. Priority one is reinvesting in the core business, about $1.5 billion a year.
Okay.
Their M&A strategy, apart from that huge First Data deal, seems focused on smaller tuck-in acquisitions. Things like CCV Group in the Netherlands, Payfair in Canada, Money in Brazil, bolstering point of sale, expanding internationally.
What about returning capital to shareholders? Do they pay a dividend?
Nope. They're very clear.
Okay.
No cash dividend. Haven't paid one for over 15 years.
Really? So what do?
They focus exclusively and aggressively on share buyback programs. In 2024, they spent $5.5 billion buying back shares.
$5.5 billion.
Yeah. And then in February 2025, they authorized another 60 million share repurchase. That's over 10% of the company's market cap right now. It's a massive commitment to buybacks.
But now, FIUSD enters the picture. That creates a tension, doesn't it, in that capital allocation plan?
Exactly. That's the new dynamic. This ambitious FIUSD platform, building it out, scaling it, that's going to require significant ongoing investment.
Right.
And every dollar that goes into FIUSD is a dollar that can't go into those buybacks investors have gotten used to.
So investors have a choice to weigh.
Precisely. You weigh the sort of certain value creation from buybacks against the uncertain, but potentially much, much larger long-term payoff if the FIUSD gamble works.
Okay, finally on management. Efficiency. How good are they at generating profits from the capital they invest, ROIC?
Return on invested capital. For Q1 2025, it was 6.17%. And what's important is the trend. It's clearly improving, up from 3.97% back in 2022.
Okay, so positive direction. How does it compare?
Well, it's modest compared to, say, asset-light networks like Mastercard at 39% or Visa at 27%. That's a different model.
Yeah, sure.
But it is notably better than their direct competitor, FIS, which was around 4%. So it signals disciplined management and, like you said, a positive trend.
Chapter 3, Financial Analysis. Let's dive into the numbers. Give us a sense of Fiserv's financial scale and strength.
Okay, so as of June 24, 2025, market cap is sitting around $90.58 billion.
Big company.
Definitely. Revenue-wise, they've got this history of consistent, high, single-digit adjusted growth. Total revenue hit $20.46 billion in 2024. That was up 7%.
Yeah.
And management's guiding for 10% to 12% organic revenue growth for the full year 2025.
So accelerating growth.
That's the guidance, yes.
And profitability, margins.
Pretty strong. Gross margin in Q1 2025 was impressive, 59.6%.
Wow.
Their adjusted operating margin expanded to 37.8%. That indicates they're getting more profitable as they grow. And management's guiding for another 125 basis points. That's 1.25 percentage points of expansion in that margin for 2025.
Okay. Net margin.
Net profit margin for Q1 2025 was 16.59%.
Healthy. For value investors, you always hear cash is king. How's Fiserv's free cash flow generation?
Yeah, they're often described as a veritable cash-generating machine. And the numbers back it up. Annual free cash flow grew from around $3.1 billion in 2022 to over $5 billion in 2024.
That's a lot of cash.
It is. Now, Q1 2025 was a bit softer, $371 million. But management explained that was due to the timing of some specific strategic investments and those big share buybacks. They expect a robust full year for free cash flow.
And that cash funds.
Both things we talked about. Strategic growth like FIUSD and those aggressive share buybacks.
What about financial stability, earnings consistency? This seems like a core part of their story.
It absolutely is. It's probably a primary pillar of the whole investment thesis for many. They boast an incredible 39 consecutive years of double-digit adjusted earnings per share growth.
39 years, double-digit.
39 consecutive double-digit adjusted EPS growth. It's an elite track record. Shows incredible performance through all sorts of economic cycles.
That's remarkable. And for 2025?
The reaffirmed guidance, 15% to 17% adjusted EPS growth expected.
Okay. Debt levels.
Well, you ready? Debt-to-equity ratio is about 1.1, which is generally seen as healthy. And their current ratio, measuring liquidity, is 1.0. Comfortable.
So pulling it all together on financials valuation, how is Fiserv priced right now compared to peers or its own history?
Okay, the trailing 12-month PE ratio, price to earnings, is around 28.9x. That's pretty much in line with the industry average.
Okay.
But here's where it gets interesting. Some sources point out that on a forward PE basis, it's trading significantly below its own 5-year average, which is maybe around 14.9x.
So cheap compared to its history, potentially.
Potentially, yes. It suggests it might be attractively valued relative to where it's traded historically, even after its recent price movements.
And if we try to estimate intrinsic value, what does a model suggest?
Right, using a discounted cash flow or DCF model standard practice, projecting future cash flows, discounting them back, based on our educational model.
Standard assumptions.
Yeah, standard assumptions. Things like maybe 10% annual free cash flow growth for the next 5 years, then slowing to a 4% terminal growth rate using an 8.5% discount rate, the WACC.
Okay.
Our model estimates Pfizer's intrinsic value is likely somewhere in the range of $195 to $225 per share.
Okay, that wraps up part 1. Let's move to part 2, starting with market sentiment. Chapter 4, market sentiment. Let's take the market's temperature. What's Wall Street saying about Fiserv these days?
Overwhelmingly bullish, actually. You've got a strong buy consensus rating among, I think, 37 analysts covering the stock. Nearly 90% have positive ratings buy or overweight.
Strong consensus. What about price targets?
The average one-year price target is clustering around $220 to $225 per share.
Okay, compared to the current $163 price.
Right. That implies substantial potential upside, according to the analysts, somewhere in the 35% to 38% range.
What was the reaction to that FIUSD stablecoin announcement? Did that move the needle?
Oh, yeah, big time. That news was a major catalyst. The stock jumped about 6% in pre-market trading right after the announcement. And the media coverage, the analyst notes, they framed it as a strategic inflection point. highlighting Fiserv using its scale to drive mainstream digital asset adoption. And the Mastercard partnership added a lot of credibility.
Beyond the analysts and the news headlines, what about other market indicators? Short interest, for instance.
Very telling. Fiserv's short interest is extremely low, just 1.18% of the float.
How does that compare?
Significantly lower than its peer group average, which is more like 6.55%.
So a few people betting against it.
Very few. That's generally seen as a bullish indicator. Not much skepticism baked in, at least from short sellers.
And technically, moving averages, what are the charts telling us?
Okay, as of June 23rd, the stock was actually trading below its 50-day moving average, which was around $174.20. And it was just below its longer-term 200-day moving average, around $165.80. So that indicates some short-term technical weakness.
Interesting disconnect then. Bullish fundamentals, analyst views, but weak technicals.
Exactly. It's a fascinating disconnect.
Yeah.
And that FIUSD announcement could be the catalyst that resolves it. That 6% jump might be the first sign.
So what should people watch for?
Keep an eye on whether the stock can decisively reclaim that 200-day moving average. That would be a technical confirmation signal for a potential resumption of the longer-term uptrend.
Chapter 5, ownership structure. All right, who actually owns Fiserv? What does the institutional ownership look like?
It's heavily owned by institutions. About 94% of Fiserv's shares are held by large institutional investors. Think Vanguard, BlackRock, the big names.
So, strong conviction from the professionals.
It suggests that, yes, the top 5 institutional holders alone control over 32% of the entire company.
Okay, but what about the insiders, the executives, the directors? This often tells a different story.
It certainly can. And here, it's a stark contrast. Insiders own a relatively small slice, only about 0.7%.
Okay. And are they buying or selling?
Well, more tellingly, over the last 3 to 12 months, the pattern has been consistent and pretty significant net selling.
Net selling, meaning more selling than buying.
Correct. Insiders sold roughly 253,000 more shares than they purchased. And notably, CEO Frank Bisignano sold over $64 million worth of stock in March and May of 2025.
$64 million
Yes.
from the CEO.
Yes. And there's only been one, quote, minor open market purchase by a director during that period.
This really feels like a classic investor dilemma, doesn't it? Institutional smart money seems to be buying or holding, but the insiders, the people who know the company best, are selling. What do you make of that?
It definitely creates a qualitative risk. You know, insider selling can happen for many personal reasons: diversification, taxes, estate planning.
Sure, it's not always a negative signal.
Not always, but a persistent pattern of net selling across multiple senior executives, especially when the CEO is selling significant amounts, that sends a conflicting signal. It's potentially bearish, and it clashes directly with that strong buy consensus from analysts.
So it suggests
that maybe those with the deepest insight into the company might view the current valuation, around $163, as fair or perhaps even fully valued, despite what the analysts' targets say. It's something investors really need to weigh.
Chapter 6, risk assessment. Let's do a quick SWOT analysis. Strengths, weaknesses, opportunities, threats to frame Fiserv's strategic position. First up, strength.
Okay, strengths are pretty clear. Dominant market position, immense scale we talked about, that durable recurring revenue model with high switching costs.
The moat.
Exactly.
Yeah.
Those fortress financials, especially that 39-year track record of double-digit adjusted EPS growth, and proven innovation capabilities. Clover's a great example, and now potentially FIUSD.
What about internal weaknesses? Where are they potentially vulnerable?
Well, ongoing integration risks from acquisitions like the massive First Data merger are always there. There's dependence on third-party systems for hardware or telecom.
Okay.
Significant operational and cybersecurity risks, too. They're a high-value target for attacks, obviously.
Accept.
And, as we discussed, that controversial CEO leadership style. The profit over people reputation could genuinely hinder their ability to attract and retain the tech talent they need for future growth, especially in digital assets.
Okay. Opportunities. What's the big upside potential?
FIUSD is clearly number one.
Yeah.
The launch, the Mastercard partnership.
Right.
It presents a monumental opportunity to drive mainstream digital asset adoption, maybe create a whole new payment network.
Huge potential there. Anything else?
Definitely. Significant potential in international expansion, Europe, Latin America, Asia, and just capitalizing on those big fintech trends. Embedded finance, AI, automation.
And finally, threats. What external factors could derail things?
Intense competition, for
You-
sure. It's always evolving, coming from big incumbents and those agile fintechs.
Right.
Ongoing regulatory uncertainty is still a factor, even with the clearer stablecoin picture. And macroeconomic headwinds are always a risk.
Like a recession.
Yeah, an economic downturn would reduce transaction volumes, which hits their revenue.
Yeah.
High inflation, high interest rates increase costs and constrain their clients' businesses, too.
Geopolitics. Tariffs.
Absolutely. Geopolitical factors like those U.S.-imposed tariffs mentioned for 2025 could indirectly hurt transaction volumes by slowing trade, create market volatility, and even impact international earnings depending on how exchange rates move.
So if you put that whole SWOT analysis together, how does it summarize Fiserv's position right now? Does it answer that core question we started with, transformation versus stability?
I think it does. Fiserv's huge scale and its deep roots in traditional finance. That's both its greatest strength and its potential vulnerability.
How so?
The main threat probably isn't a direct competitor overwhelming them head-on. It's more likely being outmaneuvered, maybe becoming less relevant if they don't adapt fast enough to nimbler players.
So FIUSD is their answer.
Exactly. The aggressive FIUSD launch is this calculated gamble. They're leveraging their existing strengths, the scale, the client base, to try and seize this massive digital assets opportunity, to lead rather than follow or be disrupted.
So the success or failure is key.
It likely defines their competitive standing for the next decade. It directly addresses whether they truly transform or if the attempt risks undermining that stability they're known for.
Chapter 7, Conclusion. Okay, let's bring it all together for you, the listener. Boiling it down, what are the key arguments for the bullish case on Fiserv?
All right, the bull case really rests on that unmatched consistency and financial strength. That 39-year EPS growth record is just incredible. They have a wide moat, strong free cash flow generation.
Stable foundation.
Very stable. And now they're at this potential strategic inflection point with FIUSD. It offers a credible, potentially very high growth opportunity to build a new payment network, leveraging that massive client base they already have.
Okay, what else?
Management's capital allocation, while maybe debated with the FIUSD investment, has been very disciplined and shareholder-friendly through those massive share buybacks. That's a strong point for many.
And valuation.
And finally, yeah, the stock appears favorably valued, especially relative to its own history, and is trading well below those bullish analyst price targets.
Okay, flip side. What are the key concerns, the main points for the bear case against Fiserv?
There are significant risks, no doubt.
Yeah.
Top of the list is execution risk for FIUSD. This is complex, new territory. Can they actually pull it off successfully?
Big question.
Huge. Then there's that unsettling pattern of consistent, significant insider selling, especially from the CEO. That just raises questions about their own view on the valuation, doesn't it?
It does cast a shadow.
It does.
Yeah.
Intense competition, those macroeconomic headwinds we mentioned, a downturn, tariffs impacting volumes, those are real threats.
Right.
And finally, that capital allocation conflict is real. Investing heavily in FIUSD will take capital away from the buyback program that many investors like. That's a trade-off.
So based on our deep dive, what's the summary on valuation and what's the final concluding outlook for Fiserv?
Well, our educational DCF model pointed to an intrinsic value range of $195 to $225 per share. That's quite a bit higher than the current price, around $163. And it aligns pretty well with the analyst consensus target around $220.
Okay.
So the market seems to be presenting investors with a choice right now. Do you focus on the strong fundamentals, the consistency, that massive digital asset potential with FIUSD? Or do you weigh more heavily those significant qualitative risks, the execution challenge, the insider selling, the macro threats? Fiserv's ultimate path, its trajectory from here, really depends on management's ability to navigate this pivotal moment successfully. Can they transform into a digital finance trailblazer without sacrificing that hallmark stability?
So what does this all mean for you? Fiserv really is standing at a fascinating crossroads. Can a titan of traditional finance truly become a digital asset trailblazer? Will its history of stability be its greatest asset in this race, giving it credibility? Or will it be a drag, slowing it down in the face of rapid digital finance innovation? That's the big question for you to mull over.
And just a reminder, this analysis was generated by an AI system. It's for educational purposes only and absolutely should not be considered financial advice.
That's right. Please do your own research or consult with a qualified financial advisor before making any investment decisions. And if you want more deep dives like this one, please make sure to like and subscribe to the Stock Analytics AI YouTube channel. Remember, members get priority deep dives on tickers, and we are covering all S&P 500 stocks in the coming months. Members can also suggest stocks in the comments.
Great value.
And for a one-off deep dive, just drop us a super thanks. Thanks for joining us on the deep dive.